All trading videos by OFA are for educational purposes only to illustrate sample use cases of the software functionality. OFA is not a trading system or strategy being marketed on a performance track record of live or hypothetical results. Trading involves substantial risk. Please do not purchase or subscribe to OFA services without carefully reading the complete required disclaimers and terms and conditions located on the OFA website. In today's lesson, we're going to look at how to play off of a double top. Now, in this particular scenario, what's happened is the market has expanded above the prior range high, so we would assume that it's going to trend. But you can see that the CWAP trade that we would normally take for a trend failed. The market pushed back down through, which at first glance would indicate that we're trading back down to the low. However, the market has turned back up and started moving back up, presumably up to the high. Well, in this scenario, there's really only two things that might happen. Either we're going to trade to the top and have what looks like a double top where we then trade back down, or when we trade up to the top, we'll have a breakout and continue moving higher. So we want to look at how OFA can help us find the right trade in this scenario. Well, because this is already broken, I'm going to move the profile that we have off of here. And what I want to do is let the market play through and see, as we move back up to the top, if we can set ourselves up for whichever one happens. In other words, we don't want to complicate this with 2 or 3 or 4 different types of trades. We want to have one very simple algo that we can run with one live profile that can help us right as we get up to the top of this range. The first thing we want to do is get some sense of measurement of where the market ought to trade to. In order to do that, we're going to need a decision point up at the top to tell us where the bulk of volume traded. Now this means, because the point of control is here, that in order for this high to hold again, we should be seeing a concentration of volume right here around 73.70. And if we trade higher and penetrate 7,400, that it's very likely that the market is going to break out. So we want to be prepared for that breakout, or if the market is going to hold in this area, we want to be prepared for the double top to watch the market roll back over. Well, we've now reached that point of control, and this is a good time for us to get a range profile on. And you can see we've actually traded not only to the high, but we've just ticked through where the expectation that we're going to hold should be. So we would think in our minds that now we're probably looking at a breakout. So if the market were to accelerate here and move higher, once we break the highs, we want to trade off of the volume weighted average price long with a stop down below our value area. Well, it certainly looks as though the market's trying to break out, so we want to be prepared as soon as we start making new highs and expand away from volume to put that long trade on. So I want to go ahead and be set up to trade at the VWAP with a value execution. But as you can see, rather than breaking out of the top, it looks as though now the market is starting to break over and break down. So we want to do the exact opposite. Instead of buying off of the volume weighted average price, now that we've rolled over and made a double top, we want to use the VWAP as an entry short with our stop up above the other edge of value. So AlgoX makes that really easy. We don't have to change anything. We just have to click the short button, and it goes ahead and drops our order out there for us. So in those moments where we don't have much time to decide whether we're going long or going short, and this is always going to happen at critical breakout points, right? In this case, if we had broken out, we would want to get long, and we'd want to get long as quickly as possible. But once we see the market roll over and break away from the bulk of trade, we see that big transition from buyer to seller, and now our opportunity is to sell into it rather than to buy the other side. All right, well, the order is picked up, and we see that our stop is right on the other side of value, as well as on the other side of the point of control. So we can sort of see the extreme volume that was transitioned up at the top, and we've managed to tuck our stop right behind that just by using the algo execution for value. Now what we want to see is the market break over and move down into this 7,300 area. Now we can see 7,300 is just a 2-to-1 multiple of what my entry and stop was. So Algo is going to do all of that for me really what I'm interested in is, am I in a good place here? Right? I can look and see that there is a low here that we're very likely to bang up against. We could just be stuck in a range. So just like I did up here, I want to go in and just get a sense for where that volume falls. And to do that, I'm going to use a decision point. And you can see that the point of control on this is about a tick higher than where my resting order for the first target is. So if I wanted to make an adjustment to that, I can always drag my order up, get it in front of it, but of course that's going to reduce my overall risk to reward opportunity that I've laid out for myself. Now the other thing that's going on here is you can see my stop is just following the edge of values. So it's doing all of the work for me. I don't need to make any manual adjustments to my stop. As long as the volume profile is up, it's going to be attached to that outer edge, one tick outside the top of the value area, which is represented by this blue shaded area here. Now, just to simplify the screen, I'm going to pull off this other profile over here. Just get that off of the screen so that we're not confused by all of the blue and yellow and gray on the screen. And I just want to note that I'm still trading below the volume weighted average price, which is this little red line here. And my stop is up above here at 7,400. Now, assuming that this actually moves down, I want to start thinking about where some other targets ought to fall as well. And I can look down at the bottom and I can see that there is a transition from seller to buyer here. So I want to go down and mark that off as well. I'm going to use my decision point for that just so that I get a very clear, concise shot at what that is. And I can see that the point of control for that transition from seller to buyer comes in at 7,200. So if the market can move down and I can start getting additional targets, it makes sense that I would want to target somewhere down here as a take profit level. And of course, with any luck, the market goes even further than that. Well, we can see that we've started bouncing off of the point of control here. We came down, probed into it, and rotated right off of it, which is sort of to be expected. Well, we can see that we did bounce right off of the point of control. So it's a good lesson that when you see that your target is right behind a major transition, it's a good idea to go ahead and tuck that up and move it up in front. Even if it costs you a couple of extra ticks, it's very often worth it to save yourself from getting stopped out on a trade where you can see the roadblock in front of your trade. We knew that it was very likely that price would probe and rotate off of the point of control, and that's exactly what we've done. We're still in the trade because, of course, we're using the overall value area of the entire trade to use our stop. So our stop is one tick outside of that, and it's now come down to 73.95. So we're risking a little bit less than we originally had, and we're still in the trade, looking for it to break down and move across this range. All right, so we've come down through our first target, and now as soon as our first target is filled, you can see the second target, which this is a 3-to-1 multiple of our original risk in the trade. You can see that has popped up on the board. Now our stop is still up here trailing the outer edge of value. At any point in time, we can jump that forward if we wanted to move it to the volume weighted average price. We could simply go down and select the VWAP and pick a point either directly on it, or if we wanted to offset it by a couple of ticks, we could, and move the stop. My recommendation is that you don't set up algos that automatically move the stop too quickly. So in this case, my standard take profit and management algos aren't going to actually move this stop to the VWAP until we get to the 3-to-1 target. So once we clear the 3-to-1, you'll see the stop jump down. I leave that wide because every trade sort of has its own unique characteristics. We want the market to take off and run in our direction. And if that's the case, then obviously you want to improve your stop drastically, very quickly. But in this case, we churned so much right after the trade was filled that utilizing the volume weighted average price too early might have greatly reduced the opportunity for this trade to actually develop. Now that it's developed, you can see we just tapped the 3-to-1 price level. Even though our order wasn't filled, you can see the stop has now moved one price behind the volume weighted average price. Well, our order has been filled. For the 3-to-1, you can now see the next take profit level is down here. And this looks like it's going to be a 5-to-1 level. We can also see that the point of control is coming in at 7,200, and once again, our target, just simply because it's a mathematical multiple, has come in behind that level. For us, it's probably advantageous, as we learned here, to move that order up and improve it just enough to where we're tucked in front of the point of control. Okay, the market is breaking down towards our target. Remember, the target down here is 72.05. One tick in front of the point of control. Looks like we've held 72.10. And on the down tick, the position is closed. We take profit right at the low of the range and close out the position. So I hope this makes sense. Obviously, we don't know whether the market is going to break out or double top, but if we prepare ourselves with one simple execution strategy, which is we're going to monitor the volume once we break away from the prior high, either to the downside or to the top side, we're going to execute a long or short with the direction of the action against the volume weighted average price, with the value area, either high or low, as our stop placement. If you haven't signed up for a free trial of Tradeovate yet, I highly suggest you do so. It's a very user-friendly platform with all of the tools right on the screen, very easy to use. You can get a 14-day free trial of Tradeovate and OFA. Just go to the Tradeovate website, sign up, and once you've got your free trial, activate OFA inside the platform. Hope you enjoy it.